This trading strategy imports historical data from a CSV file. The historical data is the 4-hour Euro USD currency pair. The strategy then uses Python to loop through multiple combinations of SMA values. It backtests the strategy for each combination of the simple moving average. In this snapshot of the code, you can see the first 16 lines wherein it reads the file in via pandas, then defines a function to calculate the simple moving average, and then defines the SMA values to test. You can see the range is between 5 and 300. A list is then initialized in order to collate the results later on. Following this, trade variables are then initialized. The strategy works such that one trade can only ever be open at any one time. Hence, if the trade open flag is true, then no new trades can be open. We use the iter rows method to iterate through the dataset. The if statement in line 35 iterates through the dataset if a trade is open. If the close conditions are met, in which the close price drops below the SMA, then the trade open signal is set to false and the trade is closed. This section of code shows that if a trade is not open, then the close price exceeds the simple moving average. Then the trade is opened at the next close price. The trade open signal is subsequently marked as true, as seen on line 47. Lines 50 to 55 ensure that any open trades are terminated at the end of the dataset. Here we can see the output of the dataset. The results show the cumulative returns have been ordered in descending order in terms of cumulative return. We can see that there are 34 combinations of SMA values that give significantly high yielding profits. For example, the first combination of SMA values seen here is 110 for the short period and 370 for the long period, which gives a cumulative return of over 26%. This screenshot shows the next 34 combination of SMA values, again ordered in terms of descending cumulative return. As you can see, these are all very significantly yielding combinations of SMA values, further proving that there are a large number of combinations of simple SMA values that can generate consistently high returns in a trading strategy. This final screenshot shows yet more combinations of SMA values, all of which yield cumulative returns of around 21%. The next stage of the process was to take just one of these combinations of SMA values, and rather than just give the cumulative returns, to actually break down the whole strategy and analyze the process trade by trade to examine where the trade entries and exits were over time. The screenshot gives the date and time, open, high, low, close, short SMA and long SMA values, as well as the signals and cumulative returns generated. The blue graph shows how the strategy performed over time. As you can see, it is relatively consistent. There have been drawdown periods, but the returns in general are not wildly oscillating and would not wipe out an account. The snapshots shown here examine row by row the results of the strategy. All dates and times and trade entries can be seen. Column J has been highlighted to show that the periods of higher return are given in green and lower returns are in red. So it is easy to cycle through the strategy to see periods of profitability and of loss. Only we can see that scrolling down the column, sections of green, amber and red can be seen, but most importantly the strategy culminates in a long stretch of green, and this whole column is a visual and more detailed breakdown of the graph seen in blue that we previously examined. Using the matplotlib library in Python, we can plot out the results for this strategy. The short SMA can be seen as a red line, which is very closely trailing the candlestick chart. The longer SMA is the blue line. Sell signals can be seen as red inverted triangles, and buy signal can be seen as green triangles. When the price action is not very directional, there are a lot of crossovers of moving averages, resulting in rapid execution of trades. These trades are then quickly terminated as the short SMA crosses back over the long SMA. Periods like this, which are periods of low volatility, can result in losses in the trading strategy, but the advantage of this strategy is that the losses are kept small due to the high crossover intensity. However, when the strategy becomes more directional, there is a lower density of buy and trade signals, resulting in a trade being opened and then the price moving very directionally and then later being terminated to help lock in profit. As you can see, the right 2/3 of the graph show that the currency pair becomes very trending, and even though there are many crossovers of the two SMA values in periods of lower volatility, the less frequently occurring trades are executed when the trend is more directional, results in the overall significant profitability of this strategy. This particular trading strategy gave an 18% increase in the account size. By going through all of the SMA combinations, there were literally 3,138 combinations of SMA value that resulted in overall profitable trades.